What's up, guys? Good to be back. Um, Live trading is going to resume next week, but we'll get to that later on in the video. I want to answer some questions, emails that I got that I think are good for making videos, general questions that people may have. Well, let's get to it. Uh, Thanks for the videos. Go through. Question is, what exactly defines high volume? Does it have to be volume that is slightly higher than the rest of the day? If the volume has been low all day, but then there is a tiny increase, then surely this would not be valid. This is the question. Is it more of it's like 50% higher than the last candle? Okay. Um, High volume. Okay. So first thing to keep in mind, just make sure everybody knows, the volume is a measurement of the amount of activity in the market, right? We're measuring the amount of activity. And so it's going to be relative. It's not an absolute number or level, which most of you know. We're not looking for absolute certain levels to be reached on volume in order for it to be a valid setup. It's relative to the recent background, first of all. Also, you can think of it as the higher the volume, if you're looking for high volume, the lower the volume, if you're looking for a low volume signal at that point in time, um, the better the setup is, the better the information is, the more money is involved, right? The stronger background it creates. So you can look at it as if you're looking for high volume, the higher it is, the better the signal is. So if you're waiting for high volume to come in. So for example, we know that higher prices could tell us about sellers, or they always tell us about sellers. They may or may not show up. Now, so if we look at the high of a previous day here, right, and going into this day, here's new high ground, which I always say this is an uptrend. New high ground tells you about sellers, right? And here, obviously, up from a 1 hour point of view, and this is counter trend. On a side note, if you were looking to short during an uptrend, if I was, I'd be looking for the 1 hour to show something like this. If I'm going with a trend, let's say buying a dip without any issue of weakness or something, then I can work off a 5 minute setup and all my other analysis, and I don't need 1 hour to confirm. But in this case, is a good example of a counter trend situation where, at the very least, you wouldn't want to be holding on to long positions during an uptrend. You wouldn't want to be getting into a position long during this uptrend, having seen this much volume, right? So it's a measurement of, in this case, how much sell activity is coming into the market during this uptrend. So if you're looking at that, you say, okay, well, this is actually higher than anything the previous 2 days, obviously stands out. It's an obvious example, right? If we kind of look at what happened here, we did get higher volume, right, into a down move with a bullish reaction. And that created a support there. And what actually happened was there was buying here. Um, so it kind of just stayed in that range the rest of the day. And we could actually use this example again here. We're going into yesterday. We had an obvious resistance before London Open, and again stands out as high volume. Now this one in real time, I'm trying to see is there any like questionable moments here. In this case, this volume is higher than the recent range, right? Relative to the recent background, it's high. But if we really look at our recent days and what high volume really is and what we can expect, 3, 4 candles during an active day to be, it's in this area, right? Or at least here, right? So in this area, we're looking at what the recent high volume is, and that may change over time depending on how active the market is, and if there's holidays or if there's interest rate decisions, all right, so things will fluctuate. But it's all based on what you're just seeing to the left if you're looking at a 1 hour chart, right? Um, so here again stands out obviously as a counter trend situation. If you wanted to go short, it's a classic situation for me, right? It's a fake breakout on high volume, fake breakout confirmed at this point when it came back into range, and it could be a 5 minute short in there as far as an actual entry. But obviously that is the two candle pattern of weakness coming in, and then if you look going forward, higher volume showing strength coming in, right? And that actually just kind of killed it for the time being. So, going forward, just to kind of ramble a bit here into today, we know looking to our left, I would mark up my chart like this for this upcoming session in a few hours. And I would know that we're in an uptrend that has seen a lot of selling. I know I'm kind of going off the topic, but This is something you can look for today. If we reach here and this sort of selling shows up again, particularly if it tries to break out, and you can watch the 5 minute as it's occurring through here and particularly at the high and it's new ground. If we're really getting signs of weakness again, and we could be headed maybe for a bigger retracement, but there are also large buyers here. So we may, one kind of logical prediction is if we try to move up, we can get a read on sellers, maybe get a counter trend trade with may or may not have a large retracement, but there are buyers here, so it could just bring it to this point. We could also see going into today that through this area into support and a fake break potentially could bring it back to the high. So it could even range here for a little, but just facts, there were large buyers here, large sellers here. Typically, if an uptrend is seeing this much selling, it may be coming to the end. But if buyers are still this active, it could try, and we'll find out. And it could be a short setup. But anyway, that's a little off topic, isn't it? No. So, for example, if I was looking to short this off the high, how much volume would I need? Right? This is counter trend. Even though it's seen a lot of weakness in the background, it still has the structure of an uptrend, higher highs, higher lows. Staying above the 50 EMA, which is a good marker that you're still in that trend, but really the structure. And certainly it's seen large buying still. So it's not any sort of free fall, imbalance by any means. But, what would I be looking for, is for the sellers to show up again. And what will be the minimum high volume, for example, maybe that'll help, would be in this area. What would be the least amount of volume I would see? Again, this is counter trend, so 1 hour needs to confirm. This would be probably the least, right? So anywhere from here to whatever could be even high. If it's up here, then we're likely headed for a larger retracement down, right? So again, the amount of volume gives you a sense of how good the trade is. If it's the highest volume, higher than all these days, then it's an even better short. If it's down here, it's decent, and I would take it. If it's here, right, into new high ground, I'm skipping that. That's not telling me I can go counter trend, high probability if it's in this range. So it's really just relative to the recent background. So anywhere in here is what I'd want to see. So hopefully that helps. Let's see what else I could say. Also, keep in mind time of day, because, for example, you have something like this where at this time of day, you normally don't see that much volume, right? That's like double, triple, quadruple the amount of volume you normally see. It may have been a news release or something here, but it's like Asia Open around that time. Normally, it's this amount of volume every day at that time, right? So this really stands out. And not that I trade this time of day, but as far as your background, it's really something to notice that it is that much. And what is it? It's likely a sign of strength, and buying into it, you could probably confirm it on a 5-minute chart. Maybe it's a fib retracement of the last up move. Right. So keep that in mind, that the time of day, right, is important. If something stands out. Another thing is, like, for example, you can see the time of day here as we're moving along. Volume is very low for the time of day. And we didn't really have any sort of trending move, kind of got stuck for many hours, right? This was probably a news release, and then I kind of just went to sleep again. So, for the time of day, that's really low. So that's the kind of thing where I would say, oh, maybe come back tomorrow. It's not very active. There's not large positioning one way or the other, right? Okay, so hopefully that helps. Let me read the rest of the question and just make sure I got it all. Yeah, I wanted to mention that. Yeah, so on the 1 hour chart, I do look for, in this case, if we were shorting against an uptrend, I do look for 1 hour confirmation of weakness, like you could see yesterday off the high. If I'm going with a trend, then my 1 hour does help me determine the background if I want to even get into that trend. But if I'm going with the trend, a simple 5-minute entry at a fib retracement, fake break pattern, previous resistance turn support, the setups, and seeing the 5-minute show strength coming in and a proper entry on a 5-minute, the way I do it, that's fine. I don't need the 1 hour. If you're waiting for the 1 hour chart to go with a trend, you could miss the opportunities. You could just set up on a 5-minute, an hour or two later, it's already gone off. Okay. Next question. Can I scroll down more here? I think that you depend on two principles in your analysis. No demand, no supply. So is that enough? No, it is not enough. As most of you know, that's a piece of the puzzle, a piece of the entry or a piece of information basically that tells you the story and what you want to do. What smart money is doing or not doing if we're looking at low volume, no demand, no supply. But it's just really a part of the analysis. This is probably someone who's just discovering my videos or whatever here. So, the main thing that we're looking for is imbalance to get into a trade. If price and lower prices tell you about buyers, higher prices tell you about sellers. So if price is moving down, right, and you get high volume and a bounce as a result, we have found buyers, right? Now let's say you're at a, let's make it like this. I'm trying to do a really simple example just to explain how the two have to always fit together here. So you have a resistance level there, okay? So price moved down, found large buyers, right? Now is price going to continue up through or come down? This is a place where you're testing for sellers. And as I say, I'm looking for the no demand, no supply, in this case, no supply, in an area where sellers would be active if they're going to be, right? This is a recent resistance, the simplest thing. And there could be confluence of fibs and other things here. But obviously, a resistance area is where I want to test for sellers. Now, knowing that there's strong buying in the background, this is where the combination of the two could come together, and low volume leading to a break tells me that the selling did not show up there, and that's the no supply with the strength in the background. So smart money position here, they test for sellers. If they don't show up, they're going into like a markup sort of activity until the next test area where you could see, wrong line, where you could see again another test, right? If large selling comes in, blah, blah, blah. So that just shows how the two really go together. It's the most basic thing, is looking for the imbalance. In this case, a lot of high volume activity on the buying, low volume activity on the selling, and particularly knowing where to look for that, which you can watch my videos and all that to really test for sellers at the right areas. You want to find out if they're active by letting price test an area where they would be active if they were planning on getting in, and see if they show up or not, right? So if they don't, you get a no supply situation, low volume test. Okay. So they work together along with regular technical analysis, which gives me the levels to see what they're up to in particular. The rest of the question is, I read a lot about Wyckoff methods, but with the Wyckoff stuff, the VSA stuff, just to mention, I say this now and then, I took this piece and left that piece out. I took some of this and some of that. I studied all kinds of stuff over the last 10 years or so and put together what works. So I'm not out here trying to represent this is what Wyckoff did. I mean, I took a lot of what he did, of course, and it's always going to be there. He's just the first person that kind of laid out certain behaviors that the market, activity that goes on in the market as a pattern, as a template, and it's never really going to change. So, you're working off some of those things, Wyckoff, and the VSA stuff, obviously, and putting together sort of my own way of doing it, also with technical analysis. So I just want to say that. So if I differ from anything else, the biggest problem I face is, where can I start to identify Wyckoff phases? Okay, the phases, which it seems like you're just learning about them. You know what they are: accumulation, distribution, markup, markdown, reaccumulation, redistribution. Okay, so you're learning the phases. The main thing I use is, of course, the structure of highs and lows. If you're talking about, a markup, a markdown, it needs to be a trend. Accumulation, distribution are typically ranges with fake breakouts. So price structure. But the main thing is really the volume. So if we're continuing to see, for example, going to the live chart, continuing to see weakness. Now, the distribution, we'd have to say, has already begun on this trend. Okay, it's been going on for a while. And again, new high ground, selling. New high ground, selling. But the buyers are still there. So the distribution, the getting out of long positions, the positioning short, all that stuff has begun. There's speculation that this is a good point to get out and or get short. So we definitely see that happening. But again, after the fact, this happened, which did bring a lot of buying. So in this case, if I am calling this distribution, but I'm not calling it the proper imbalance, right? This is what we want: no demand, right? And that would tell us we're likely reversing further, right? Because this is where we're testing for buyers at this point. So it's distribution in the fact that there is that stuff going on in the high activity and the high prices and the weakness on very high volume. But and really during distribution, like I said here, I'm looking to short into the higher prices. That's where smart money's doing it. They may do it again. More likely than not, they'll look to sell here soon when price gets there today, tomorrow, whatever. And we get to find out if they're the characteristics of distribution, right? Short positions, taking profit on longs, is the signs of weakness on a high volume and 1 hour chart. And they really should start to stop the progress. This could be a double top, ideally fake break, or the sellers could show up here on high volume and bring it down or anywhere in here. You can also mark up a fib, some of the basic tools that I use, which is just the fib zone. And that's also a marker that's going to tell us about sellers. There's a little swing point here. So there could be a ton of sell positions right there. A ton of sellers could come in here, push it down, buyers don't show up, and now we've gone from distribution into markdown, right? So distribution goes into markdown when the sellers are consistent and the buyers disappear on the no demand. They're not there anymore. Or maybe they show up, there's some buying, and it just kind of fizzles out, and you start to see lower prices come in without buying. So the lower prices always tell you about buyers, right? So getting below here, which is now our automatic support, right? If you're learning the Wyckoff material, you have the VSA Wyckoff combination here, the high volume weakness, but then also the first level of support after that weakness, which is the automatic support, the distribution range. And it'll clear this if there's no demand in this area. Or it could continue up if the sellers don't show up here, right? So that's the game we're playing. But I would officially call this distribution now. And we know, what it needs to do to go to markdown or continue up. It's not always 100%. And it doesn't mean just because we're in distribution, I just need to sell all of a sudden, right? These buyers have to go away if I'm selling here, or sellers have to show up again if I'm selling here. Okay, now if I was going to buy this, I would have to do this lower, by the way, some larger fib or something, because I'm not buying into this selling, right? A lot of you know that. So if we can get lower and just see an imbalance again where there's active buying, lack of selling, I could buy lower. But I wouldn't be buying this trend right now, obviously, right? But they had a little fight yesterday, a little duel with the selling and the buying, and let them figure that out. But the information is there, the template is there, it'll tell us one way or the other. Okay. Shoving a lot of information in here, but it's good, right? So there's only one more question, which is some of the other stuff we have to talk about. Hey, Pete, when are you starting your trading session? The live trading sessions are back next week. We feel pretty lost without you. Haha. Next week. So today is the 19th, Wednesday. So starting next Tuesday, whatever date that is, I will be back, and I'm trading London Open, which is 3 a.m. Eastern my time. So I'm back to that sleep schedule. Yay. So Tuesday, Wednesday, and Thursday at London Market Open, I'm online doing live analysis, live everything, answer questions, any trade that comes up, I point it out if I'm in it, and then what to look for the rest of the day before I end the session. So it's a good guide for actually trading as well as, of course, learning, and I can answer your questions and all that in real time. We use GoToMeeting for that. So that's going to go on next week. I'm back with that. Also, the courses are on sale for the rest of this week. And then they'll go back to the regular prices. So just a heads up, Thursday, Friday, Saturday, maybe till Sunday. And then by Monday, they'll be back. So you still have 3 or 4 days if you're looking to buy it at the 50% off deal. What else? So if you're going to join the live sessions, you can go to the website, myfxsource.com. And it will be here. The live sessions are on hiatus. So it'll be here, the sign up. If you want to join the mailing list, also to be notified of when I come back or anything going on, you can put your email address here just to explain the difference. That's just for the mailing list. But if you actually have a question you want to ask now or anything, you can use this. Okay. I am not a robot. So that's it, guys. All right. Hopefully, some good information in there for you guys that are learning the method. Um, you could always, again, email me here, and now and then I do these video question answer things, particularly when it's questions that I've seen a few times. So I don't know, I want to get it out there in the video. So good stuff. I'm looking forward to getting back to the sessions. Really am. I took an extended holiday a bit into September. Oh my gosh, it's the 20th. It's the 3 a.m. stuff that kills me. I've been scalping also the cryptos, which has been fun. And that's also going to be included in the live sessions. We'll be looking at that. Okay, guys, I'll end the video. So hopefully I'll see you soon in the live sessions, or any comments you want to leave on the video. I'll try to answer. See ya.